By now, you might have heard of a program coming out called the conventional 1% down, which means you can get a conventional loan with a 1% down payment. How does it work? We're going to dive into it here and kind of get all the details. Essentially, how it works is the buyer puts down 1% of their own money as a down payment. The lender contributes 2% up to $4,000 max. So combined, there's a 3% total down payment. Now that there's a 3% down payment, it qualifies for the conventional 3% down program. Now, since the lender's maximum contribution is no more than $4,000, and that equals their 2% contribution, that means the highest price house you can look at to get the full benefit of this program would be $200,000, because $4,000 is 2% of the $200,000. The buyer's 1% contribution would equal $2,000. So the $2,000 from the buyer plus the $4,000 from the lender equals a $6,000 total down payment, which equals 3% down on a $200,000 house. So very important to keep that in mind. Next, buyers who are eligible for this program cannot have income that exceeds 50% of the area median income. Now, how do we find out what the area median income is? I'm going to put a link down below. So if you want to check out other areas, just click on that link and put in where you want to search, and you can pull up those results. This is the Freddie Mac Home Possible Income and Property Eligibility Tool. It's very simple to use. You just type in, if you have an exact address, you can put it here. Otherwise, you can put in a zip code or a city, and it will show you the area median income numbers that are important for this program. So I'm going to start with an area that's close to me. And here we can see the area median income is $81,800. So to qualify for this program, a buyer cannot earn more than $40,900. Now, what do we do with this number? $40,900 per month equals about $3,408. Under the Freddie Mac program, generally the housing payment can't be more than about 34% of this number here. So what we do is multiply this monthly gross income by 34%. And we really can't have a max housing payment more than $1,158 per month. Now, what does an $1,158 a month housing payment translate to for a sales price? Next, we're going to go over to a mortgage calculator here, and I have my page with all the different calculators. So let's click on this one and try and figure out what that number looks like. For a conventional loan, let's start with this. $130,000. Let's do 3% down. Let's put an interest rate. I'm just going to leave this here just so we can calculate numbers. Let's include the PMI, which would be roughly about 0.22. Home insurance in New Orleans, we know it's going to be a lot more than that. So let's say, use that for an estimate. Taxes should be less. And let's say it's a property with no HOA dues. When you add it all up, the total housing payment on this scenario is right around $1,100 a month. So what do we do next? Let's see what houses we can find in the New Orleans market for $130,000. Let's put this search in here. No minimum, maximum $130,000. Let's do single family homes. And this is what shows up. So we have this one for $100,000, 1 bedroom, 1 bath, 900 square feet. We have, well, I'll just let you look for yourself. I think you'll find most of the homes are in need of repair. There's a lot of them, if you look at the descriptions, it says they're a rehab or renovation or calling all investors. Basically, it's hard to find homes in that price range that are move-in ready that would be eligible for this program. Now you may say, well, maybe we can find an area with a higher median income and that will qualify you for more of a house. So in that case, let's go to one of the higher areas for income. Let's put in San Francisco. So for San Francisco, the area median income, 50% is 75,550. So let's do this again. 75,000 divided by 12 is $62.95 per month gross income. Our housing payment can't really be more than 34% of that. So let's find 34% of this number. So the housing payment can't be more than about $21.40 a month. How does that translate into a sales price? Let's see. So we're at 130,000. Let's change this to 300,000. And we already know that the maximum to get the full benefit for this program is 200,000. So we're actually going above this, but let's just play this out and see what the numbers look like. Home insurance should be less here. Taxes probably be more. We don't know HOA dues. So if we said, let me see, what do we come up with here? 2140. And we're already over here at 300,000. Maybe tax will be a little less, we don't know, but let's play this out. So at 300,000, you're not getting the full benefit. You're probably still a little bit over the qualifying amount to be eligible for the program. But let's just look and see what we can find here in San Francisco for a maximum 300,000 single family home. And you have 4 to pick from, but not really, because they're all pending and they're all look like this. Not much else to say. I think what you'll find is trying to do this program in major metropolitan areas is going to be very difficult, simply because it's going to be hard to find properties in a price range that would make that property and that buyer eligible. Buyer's only going to be eligible up to a certain amount, and there really just aren't properties available in that price range. So some people may say, well, instead of looking in those major metropolitan areas, how about we look outside those areas? Maybe you can find more properties for a lower price that my buyer can get approved for. And I agree with you. However, if you're doing that, I would suggest, rather than doing this 1% down conventional loan, look at a USDA Rural Development loan. How USDA works, I'll put this link down below also, but this is the USDA Rural Development Property Eligibility Lookup Tool. And this shows the entire US. Any area that you see that's highlighted yellow like this would not be eligible for USDA. Every other area that's not yellow is eligible. So you can put in an exact address if you know it here, and it will zoom you right into that area and let you know if it is eligible. Otherwise, you can just scroll to what area you're looking at. In New Orleans, we know that this area here is not eligible for USDA. But zoom out a little bit. Pretty much everywhere around New Orleans is eligible for USDA. Benefits of USDA, you're going to have higher income limits, which will allow you to qualify for a higher priced home, and therefore give you a lot more options to look for your buyers. On average, the rates on a USDA loan are a little bit cheaper than what you will find on the Home Possible 3% down conventional program. There are slight differences in the monthly mortgage insurance and an upfront mortgage insurance cost that have to be considered also. So your best bet is to talk to a loan officer about your specific scenario and see what the best program would be for you. That's New Orleans. Let's zoom over to where else we looked, San Francisco. And you can see a lot of this area is not eligible for USDA, but kind of the outlying areas would be. Again, I'm going to put a link to this down below so you can click on it and check out specific areas that you want to look at and see what's eligible. But essentially, my thoughts on this 1% down program are that it helps qualify in areas where you cannot get a USDA loan. However, in those areas, I think it's going to be very difficult to find properties that are priced in a range that would qualify for this program. So if you have buyers that are reaching out to you and asking you questions about the 1% down conventional program that they heard about or read about somewhere, now you have some information you can share with them, or you can just share them this video so they can see how the numbers play out. Again, in cities where USDA is not eligible, I think it's going to be a hard program to qualify for. You have to go outside those cities to find properties that you can qualify for. And if that's the case, I think a USDA program might be a little bit better. So that's my thoughts on the news that came out this week. Let me know if you have any questions. If you have particular scenarios you want to look at, let me know. I'm happy to go through that with you. Thanks for watching. Take care.